Can I buy a home while owing student loans? For many aspiring homeowners, carrying student loan debt feels like an obstacle to entering the housing market. In 2025, with interest rates stabilizing and Pinellas County seeing steady demand for homes, the question remains, can you realistically buy a home while still paying off student loans? The short answer is yes, but it requires careful planning, financial discipline, and an understanding of how lenders evaluate debt. Understanding how student loans impact home buying. Lenders use a key metric called the debt-to-income DTI ratio to determine whether a borrower can handle a mortgage. Your student loans are factored into this calculation along with credit cards, car loans, and other obligations. A high DTI can reduce the loan amount you qualify for or increase your interest rate. However, not all student loans carry equal weight. Federal loans in deferment or with income-driven repayment plans may have lower monthly obligations for DTI calculations, giving buyers more flexibility. Knowing your specific loan type and repayment status is critical before beginning the home buying process. Steps to prepare for homeownership. Assess your finances thoroughly. Start by reviewing your income, monthly expenses, and total student loan payments. Create a realistic budget that factors in a mortgage, property taxes, insurance, and maintenance. This will help determine what price range is sustainable. Check your credit score. A strong credit score can offset concerns about student loan debt. Lenders favor buyers with credit scores above 700, which can result in better mortgage rates, even if you have ongoing student loan payments. Consider your loan options. Conventional mortgages, FHA loans, and VA loans have different requirements regarding DTI and down payments. Some programs are more forgiving of student debt than others. Speak with a mortgage advisor to identify the best fit for your situation. Save for a down payment and emergency fund. Even with student loans, saving at least 10 to 20% for a down payment can improve your approval odds and lower your monthly payments. Additionally, maintain an emergency fund to handle unexpected homeownership expenses. Market context in Pinellas County. In Pinellas County, the housing market continues to attract young professionals and families seeking affordable, well-located properties. Areas like St. Petersburg, Clearwater, and Seminole offer options for buyers with moderate budgets, making it possible for those managing student loans to enter the market without overextending themselves. Strategic considerations. Timing matters. Avoid rushing into a purchase if student debt repayment significantly limits your buying power. Waiting a few years to pay down loans can improve affordability. Prioritize stability. Look for homes within your comfortable budget to prevent financial strain. Even a modest property purchased wisely can build equity and long-term wealth. Explore assistance programs. Some local and federal programs provide down payment assistance or favorable loan terms for first-time buyers with student debt. Conclusion. Owning a home while managing student loans is challenging but achievable. With a clear understanding of your financial position, careful planning, and knowledge of lender requirements, you can take steps toward homeownership without jeopardizing financial stability. In Pinellas County, moderate housing prices and a variety of programs make it feasible for many buyers to enter the market even with student debt.